growing faster than gold. Silver is in the middle of a historic rally. The rally started in 2025 and the momentum has continued in the new year. On the first trading day of 2026, silver rose by 3%. It is now trading at around $74 per ounce. 1 ounce is roughly 30 grams. In 2025, silver surged by nearly 150%.
So how does a soft, whitish-gray, lustrous transition metal like silver suddenly become important enough that even Elon Musk feels the need to warn people about it? Why would billionaire big whales panic over one single metal? And how can something so small quietly shape your daily life? It sounds odd, but it matters because even one metal can sit at the heart of modern technology. Your smartphone, laptop, electric vehicle batteries, solar panels, and a whole bunch of home appliances depend on it. But when China limits exports, supply tightens, so manufacturers end up paying more for raw materials. That cost doesn't just disappear, although companies try to manage it. It usually gets passed on to consumers because it has to. So gadgets, EVs, repairs, and even solar installations can spike in price, even though the change starts with just one metal.
So what explains the sharp rise? The way governments look at silver is changing. It is no longer just a precious metal. It is now being seen as a strategic asset and an important rare earth metal. In 2025, the shift became official. Governments started protecting their silver stockpiles. The first move was made by the United States of America, specifically the US Department of Interior.
It sounds surprising at first, but it starts to make sense once you understand what silver actually does and why its price matters so much. Silver isn't just another shiny metal people collect because it looks nice. It has the highest electrical conductivity, thermal conductivity, and reflectivity of any metal. So it plays a critical role in modern technology, even though most people rarely think about it in their daily lives. Silver occurs in the Earth's crust both as pure native silver and mixed with other metals like gold. It's also found in minerals such as argentite and chlorargyrite. But here's the key part. Most silver isn't mined on its own. It usually comes as a byproduct of refining copper, gold, lead, and zinc. Because of that, silver supply doesn't easily increase just because demand rises. Even though prices can surge, production can't quickly respond because miners aren't digging primarily for silver. That imbalance alone creates pressure, but it's only one part of the bigger picture. For thousands of years, silver has been valued as a precious metal, often sitting beside gold and platinum. It's used in bullion coins and bars, and its purity is measured on a per-mil basis. So a 94% pure alloy is labeled 0.940 fine. Although silver is more abundant than gold, it's far less common as a native metal, which adds another layer of scarcity. Among the big three precious metals, gold, silver, and platinum is the rarest. But silver still holds a unique place because it bridges the gap between being a store of value and an industrial necessity. That dual role is where things start to get complicated. Silver isn't just locked away in vaults or worn as jewelry. A huge bunch of industries rely on it every single day. It's used in solar panels, water filtration systems, electrical contacts, conductors, mirrors, window coatings, and catalysts for chemical reactions. It's also found in stained glass, specialized food products, and high-value tableware, which is why we still use the word silverware. On top of that, silver compounds play a major role in medical applications because dilute silver nitrate solutions act as disinfectants and microbiocides. They're used in wound dressings, bandages, catheters, and medical instruments, even though most patients never realize it.
And silver has become a vital ingredient for technology. You need it to build solar panels and electric vehicles, even military tech and consumer electronics. They cannot be made without silver. And once silver was named a critical resource, prices moved up fast. Investors started buying it. Traders began stockpiling it, especially in New York. Last month, their silver inventories touched record highs.
Because silver is everywhere behind the scenes, a sudden price surge doesn't just affect investors. It ripples through manufacturing, healthcare, and clean energy. That's exactly what's happening now. Silver prices have surged to record highs, and this jump has been dramatic. At the start of December, silver was around $56 an ounce. By last Friday, it hit $79 an ounce for the first time ever. To put that in perspective, it was just $29 an ounce at the beginning of 2025. That kind of move in such a short time frame naturally raises alarms. Elon Musk summed it up bluntly when he posted, "This is not good. Silver is needed in many industrial processes." His concern isn't theoretical. Silver is critical for electrification, solar power panels, electric vehicles, and data centers. All of these sectors are already experiencing rising demand, so they're consuming silver inventories faster than they can be replenished. Even though innovation continues, physics doesn't change, and silver remains hard to replace in many applications without sacrificing efficiency. At the same time, silver is also behaving like a monetary metal. Investors see it as a store of value, especially during times of economic uncertainty. Analysts say the recent rally in silver is part of a broader precious metals surge that has also pushed gold and platinum to record levels. One major reason is the expectation that the U.S. Federal Reserve will cut interest rates in 2026. When rates are expected to fall, investors often move money into hard assets like precious metals because they help protect against inflation and currency debasement. But monetary policy isn't the only factor driving the surge. New restrictions on silver exports from China, set to begin on January 1st, have created serious supply fears. China plays a major role in the global metals market, so any export limits immediately tighten availability elsewhere. Add geopolitical tensions into the mix, and demand for safe haven assets rises even more. So investors pile in, even though the industrial side is already struggling to secure enough supply. Market analysts are starting to describe the situation in dramatic terms. Tony Sycamore from IG said a generational bubble may be forming in silver. According to him, capital is flowing heavily into precious metals because of expected Fed rate cuts, strong central bank buying, and private investor demand. But the dominant driver right now is a severe structural supply-demand imbalance. In simple terms, there just isn't enough silver available for how much the world wants and needs, so everyone is scrambling for physical metal. Adding to the tension, much of the world's readily available silver is reportedly sitting in New York. It's waiting on the outcome of a U.S. Commerce Department investigation into whether imports of critical minerals pose a national security risk. If that review leads to tariffs or trade restrictions, supply could tighten even further. So even though the metal exists, it's effectively frozen, which makes the market even more nervous. Silver isn't alone in this rally. Gold and silver are on track for their best years since 1979. Gold has risen more than 70% this year, climbing from about $2,623 an ounce at the start of 2025 to over $4,500. Platinum has also seen massive gains, with spot prices jumping sharply in recent weeks. Platinum and palladium, both crucial for automotive catalytic converters, have surged due to tight supply, tariff uncertainty, and investors rotating out of gold into other precious metals. Platinum alone is up roughly 170% this year. So even though silver might seem like just another metal, its current surge reveals something much bigger. It sits at the crossroads of technology, clean energy, healthcare, and finance. Because supply can't easily expand and demand keeps growing from multiple directions, price spikes become almost unavoidable. And although investors may celebrate rising charts, manufacturers and consumers end up facing higher costs because silver is deeply embedded in the systems modern life depends on. Right now, the global silver picture is shifting fast, and it starts with where the metal actually comes from. Peru holds the world's largest silver reserves with roughly 140,000 metric tons, which puts it at the top in terms of long-term resources. Australia and Russia follow close behind, so together they shape a big part of the world's silver base. But even though Peru dominates reserves, Mexico often leads in annual production, which shows how reserves and actual output don't always line up. That imbalance already hints at why silver markets can feel tight, even when the metal seems plentiful on paper. Things became more intense in 2025 because silver imports surged sharply, signaling that the metal is no longer just a traditional precious asset. According to the Global Trade Research Initiative, this jump reflects silver's growing strategic importance. driven by rising industrial demand, ongoing supply constraints, and mounting geopolitical tensions. In other words, silver is being pulled in multiple directions at once, so pressure keeps building. India sits right at the center of this shift. It became the world's largest importer of refined silver, bringing in an estimated $9.2 billion worth last year. That figure represents a 44% increase from the previous year, even though prices rose steeply. In India's domestic market, silver prices nearly tripled in rupee terms over the past year, climbing from around 80,000 to 85,000 rupees per kilogram in early 2025 to above 2.43 lakh rupees per kilogram by January 2026. That kind of price movement doesn't happen unless demand is strong enough to overpower sticker shock. The GTRI report explains that silver's rally isn't just about investors seeking safety, although that plays a role. Geopolitical uncertainty, including developments in places like Venezuela, has certainly pushed some safe haven buying. But the more important factor is a structural shift in global demand. More than half of all silver consumption is now industrial, which changes the entire market dynamic. Electronics, solar power, electric vehicles, defense equipment, and medical technologies all rely heavily on silver. Solar power alone accounts for about 15% of global silver demand, so even small expansions in clean energy translate into massive new demand for the metal. This industrial pull explains why silver trade has grown so dramatically. Global trade in refined silver has expanded nearly eightfold since 2000, showing how silver has transformed from a traditional precious commodity into a critical industrial input. But supply hasn't kept up. Annual supply deficits of roughly 200 to 250 million ounces have become persistent, while mine output has remained mostly flat. Because most silver is mined as a byproduct of other metals, production doesn't respond quickly to rising prices. So demand keeps climbing, supply stays stubborn, and the market tightens year after year. China plays a central role in this story as well. It is the world's largest processor of silver ores and concentrates, which gives it significant influence over refined silver supply. India, on the other hand, remains largely a consumer. In 2024 alone, India imported more than 1/5 of the world's refined silver trade. GTRI estimates that India imported about $6.4 billion worth of refined silver that year, while exporting less than $500 million in silver products. That gap highlights how dependent India is on imports, even though its industrial and energy needs keep growing. Concerns over supply have intensified since China announced license-based export curbs on silver, effective January 1st. Under the new system, each export shipment requires government approval, which injects uncertainty into global supply chains. Even if silver exists in sufficient quantities, delays and administrative barriers can restrict access, and markets tend to price in that risk quickly. So prices rise not only because silver is scarce, but because access to it feels less predictable. Because of all this, GTRI argues that India needs to rethink how it views silver. Instead of treating it purely as a precious metal, the report urges policymakers to recognize silver as a strategic industrial and energy transition resource. According to GTRI founder Ajay Shrivastava, India should integrate silver into its broader minerals and clean energy strategy. That means securing long-term supply through overseas mining partnerships, building domestic refining and recycling capacity, and diversifying import sources beyond a small group of trading hubs. In a fragmenting global order, securing silver is becoming almost as important as securing energy itself. The report also points out troubling inconsistencies in global trade data. In 2024, reported global imports of silver ores and concentrates exceeded reported exports by about $3.6 billion. That gap suggests underreported or opaque trade flows, likely involving a small number of supplier countries. Although this doesn't automatically mean wrongdoing, it does add another layer of uncertainty to an already stressed market. At the same time, silver's rally is being amplified by political and financial turbulence, especially in the United States. President Donald Trump's latest policy moves have helped push gold and silver to new records. A mix of geopolitical actions and interest rate-related initiatives has driven investors toward precious metals and even industrial metals like copper and tin. This movement fits into what's often called the debasement trade, where investors buy hard assets because they fear currencies like the US dollar could lose value. Markets saw a version of this trade last year when Trump's tariffs triggered panic selling in US stocks and treasuries and sent investors rushing into store-of-value assets like gold. Now that pattern is re-emerging. After finishing 2025 with its best performance in decades, gold is already up another 5% this year. Silver, which also had its strongest run since 1979 last year, is up about 25% year-to-date, marking its best-ever start to a year. Meanwhile, the US dollar index has fallen about 1% from its November peak, reinforcing the sense that confidence in the dollar is wobbling. A quick look at events in January shows why investors are reacting so strongly. On January 3rd, the US raided Venezuela and captured President Nicolas Maduro, which sent gold up more than 2% and silver up around 5%. On January 9th, Trump proposed capping credit card interest rates at 10% for a year, raising concerns about unintended economic consequences, and again, both gold and silver jumped. On January 11th, news broke of a Justice Department investigation into Federal Reserve Chair Jerome Powell, reigniting fears of political pressure on monetary policy. Gold and silver both climbed in response. The tension escalated further on January 12th and 13th, when Trump announced a 25% tariff on nations doing business with Iran and warned of strong action if Iran killed protesters. Since those statements, gold has risen about 1%, while silver surged roughly 10%. According to economists like Jose Torres at Interactive Brokers, these moves reflect a renewed "Sell America" impulse, similar to what markets saw last year when tariffs first rattled confidence. Analysts at Deutsche Bank point out that fears of currency debasement and future inflation, combined with geopolitical uncertainty, are driving demand for gold and silver. BCA Research has echoed that view, saying parts of the dollar debasement trade appear to be on fire. Strategists like Carl Shimoda argue that gold and silver could continue to rise as investors double down on alternatives to the dollar. Other forces are adding fuel. Central banks have been strong buyers of gold as they diversify reserves away from the US dollar, reinforcing the broader Sell America theme. Silver is benefiting too, especially as it gets tied into the AI and data center boom, where its conductivity is critical. Supply pressures and speculative trading in China are adding another push. As JP Morgan's market intelligence team summed it up, the Sell America narrative may be the dominant force shaping markets right now, and silver sits right at the crossroads of all these pressures. Now, people like us naturally start wondering what all of this actually means for everyday life, because most of us aren't trading silver or tracking global supply chains. But even though silver feels distant, its price quietly works its way into daily expenses. Once silver becomes more expensive and harder to source, the effects don't stay limited to markets or headlines. They show up in normal routines and household budgets. The first place people feel it is everyday technology. Silver is a key component in smartphones, laptops, electric vehicles, solar panels, and a whole bunch of home appliances. Because manufacturers rely on silver for electrical conductivity and efficiency, higher prices immediately raise production costs. If China limits exports at the same time, supply tightens even more. So manufacturers end up paying more for raw materials. And although they try to absorb some of it, those costs usually get passed on. That means gadgets become pricier, EVs cost more upfront, and even simple repairs can go up in price because components themselves are more expensive. Renewable energy is another area where the impact becomes clear. Silver plays a critical role in solar panels, so when prices spike, panel production becomes costlier almost overnight. Installation prices can rise, and although governments and companies want to push clean energy, higher costs can slow projects down. For normal people, this may mean fewer affordable rooftop solar options or higher electricity bills in the long run. Even if someone never installs solar panels themselves, slower adoption can keep energy prices higher across the board. Rising silver prices also feed directly into inflation pressure. When industrial metals get expensive, manufacturing costs increase across multiple sectors at the same time. Companies raise prices not just on electronics, but on anything that depends on complex supply chains. So groceries, transportation, housing materials, and everyday services can all become more expensive. Even though silver isn't something most people ever buy directly, it works quietly in the background, but the effect is real. Jobs and businesses are affected too. Industries that rely heavily on silver, like electronics, EV manufacturing, and renewable energy, may slow hiring or delay expansion plans. Some companies try to cut costs elsewhere to stay profitable, which can impact job stability and wage growth. Although this doesn't always lead to immediate layoffs, it creates uncertainty, especially for workers connected to manufacturing, engineering, or tech supply chains. There are also mixed effects on investments. For ordinary investors, people who already own silver, mining stocks, or metal-based funds may benefit as prices rise. But at the same time, companies that depend heavily on silver may see their stock prices struggle because higher costs squeeze profit margins. So while some portfolios gain, others take a hit, especially those exposed to technology or manufacturing firms. Geopolitical supply risks add another layer of stress. When China limits exports, it raises concerns about global dependence on a small number of suppliers. For normal people, this can translate into more frequent shortages, sudden price spikes, and governments spending more money to secure resources. That spending often comes from public funds, which eventually feeds back into taxes or reduced spending elsewhere. The bottom line is that for everyday people, the impact shows up as higher prices for electronics, vehicles, and energy, more inflation pressure on household budgets, and greater uncertainty around jobs and investments. When figures like Elon Musk speak out, it's usually because these rising costs hit large industries first. But over time, what affects industries almost always reaches consumers too. And that's that for today's video. Thanks for watching, and we will see you in the next one.